Okay, let's take a look at exercise 9-19. So this one is on impairment losses. So the company was preparing their financial statements, and as part of the year-end procedures, they assessed the assets and prepared the following schedule. So for part 1, we're to record any impairment losses at December 31st. So when we're looking at impairment, we want to compare book value to recoverable amount. So book value is our cost less our accumulated depreciation. So we take each item, equipment, furniture, and so our costs and accumulated depreciation are given. So from that we can work out our book value. And then we're given the recoverable amount. So we need to compare book value to recoverable amount. So for equipment, the book value is 20. The recoverable amount is 8,000. So our book value is higher than the amount that we can get for the actual equipment. So therefore, we need to write it down to the 8,000. So we're going to record an impairment loss. The impairment loss is the difference between the two values. The furniture book value is, as compared to recoverable amount, the book value is less, so we're fine. There is no impairment loss. Land, so land is cost. There is no depreciation. We do not depreciate land. So we're comparing the cost then to the recoverable amount, and again, the book value is less, so there is no impairment loss. Office building, our book value is 54,000. Recoverable amount is 52,500. So again, our book value is higher, so we need to write it down. So we're going to record an impairment loss. And warehouse book value is less, so we're fine. There's no impairment loss there. So to record our impairment loss, we're going to go up to the top of the solution here. So the impairment loss is the 12,000 plus the 1,500. So we record the impairment loss, debit 13,500, and then we credit each of the assets. So equipment the loss was 12,000, and the office building the loss was 1,500. Next, we move on to the second part where we record depreciation for each asset. So the method for depreciation is given for each item. Equipment is by units. Furniture is double declining balance. Land, of course, is not depreciated. And the office building and warehouse is straight line. So let's take a look at equipment first of all. So it's kind of a convoluted, long method here, but to work out our depreciation, typically it would be the 40,000 cost less the residual value of 5,000, and we would divide that then by the useful life of 7,000 units, which our depreciation would be 5,000 per unit. Now we have a couple things happening here. First of all, remember when I said when we use units or double declining balance, we need to make sure that we don't go over the maximum allowed depreciation in total. Plus we had an impairment loss. So we need to take those things into account. So typically the depreciation would be $5 per unit. Now there's already 20,000 in depreciation. So at $5 per unit, that means there was already 4,000 units produced. The machine has a useful life of 7,000 units. 4,000 were already depreciated to date, so there's 3,000 units remaining. So that's what we have left in units. Now, the original cost was 40,000. There was an impairment loss of 12,000, so the 28,000 is the new revised cost. 28,000 less the 20,000 that's already depreciated, which gives us a new book value of 8,000. The book value less the 5,000 residual value means that there is $3,000 remaining that we can depreciate. So the $3,000 remaining left to depreciate divided by the 3,000 remaining units that are remaining, because there's out of the 7,000 units that the machine can make, 4,000 have already been depreciated, which we calculated up here. So 3,000 divided by 3,000 remaining units is $1 per unit, which is our new depreciation rate. So hopefully that's understandable. But these things are because, first of all, we need to make sure what's left to be depreciated, that we don't depreciate too much. And we need to take into account the impairment loss and such. So now we're told that there's 1,800 units. So 1,800 units times $1 per unit, which means our current depreciation for this year is $1,800 for the equipment. Furniture. So again, we have a cost of $12,000 minus the amount that's already been depreciated, which is $9,509, which leaves us with the amount remaining of $2,491. So we take its 8 years useful life, so 2 divided by 8 will give us the rate, and it's the rate times the current book value, which is $2,491, which gives us $623. Now that exceeds the maximum allowable depreciation that can be taken that year, because remember, we can only take the remaining book value, which was $2,491, and there was a residual value of $2,000. So the maximum that we can take is $491. So even though the calculation says it's $623, we have to compare the total and make sure that we're not over depreciating. So here we can only take the maximum allowed of $491. Land doesn't get depreciated, so we're going to leave that one. Office building, excuse me, office building and warehouse are both straight line. So for the office building, it's $77,000 cost less, excuse me, less the $1,500 impairment loss, which gives us $75,500 as a new revised cost. From this, we are going to subtract the accumulated depreciation of $23,000, which means remaining book value now, the current book value is $52,500. So $52,500 less the residual value, and the remaining useful life, so it was 15 years was the original useful life, and that was purchased in 2015. So the remaining useful life at this point in time, because it was purchased in April, so we have to go back then and see that 9 months would have been taken: April, May, June, July, August, September, October, November, December. Because it was April 5th, we would have taken a full month for April. So 9 months in the first year, and then the remaining from that would have been in 2015. So 2016 through 2020 would have been taken. So that leaves 9.25 years remaining. So we take this amount and divide it by 9.25 years, and we get 3838. And we only had to do this because of the fact that we had an impairment loss. Otherwise, we would do according what we're doing to the warehouse, which is the $55,000 cost less the residual value divided by the useful life, which is what we would have taken every year for straight line depreciation. So even though the office building was straight line, we do have additional calculations because we have to take into account the impairment loss, and now we have to work out, based on that, our new depreciation for each year. Okay, so I hope that helps here. I know it's a lot of information put into these notes. So then we take this information here and we go and do our entry. And our entry is just a debit to depreciation expense for the particular item, so equipment for example, and a credit to accumulated depreciation. We've already calculated our amounts, so we just do our entry for each item. Okay, hopefully that helps. It'll make more sense if you work through the question on your own and then refer to the video and the solution.